What's going on, guys? It is Tuesday, right, Scotty? Tuesday the 16th.
Yeah, last time I checked, a couple hours ago, it was still Tuesday.
It's rolling by so damn fast. I can't keep track of it. Plus, I don't even know where the hell I'm at anymore. I got got to be on another flight tomorrow morning at the door by 4 a.m. What's funny about when I book flights, I have I don't know what goes on in my damn head, but it seems like an advisable thing at the time I book it to be flying out at 6 a.m. And then the day before, I'm like, why the freak did I book that stupid ass flight to fly out at 6 a.m.?
Beat the traffic.
It's true. Definitely beat the traffic. And then when you walk into the airport, man, there's hardly anybody in there typically. Last time I went, dude, it was loaded. It might as well be noon on a Friday. So what do we got going on here? I'm looking at a couple of things that popped up that look rather interesting. Is that there are banks out there, people are still pulling money. And because of that, they're having to bring capital in. I don't know if you're seeing this, but they're selling treasuries, they're selling other long-term instruments to be able to get more capital in. The last time we saw this, now it was a lot more extreme, but the last time I remember seeing something that even happened to any level was right as COVID hit, when they basically had a massive amount of decline in the stock market. You had all those margin calls. They had to sell assets to get capital back in. Some mortgage-backed securities dropped really hard. And then the Fed dumped in $1 trillion between March 20th and March 30th of 2020. So I don't know that we're going to get the Fed's involvement. I doubt that's going to happen. The other thing we saw, retail sales are down. Actually, people aren't spending money like they were spending right now. It's starting to get tighter. Jobs issues, income issues. We talked before about how many people have had their hours cut. What are you seeing out there in the retail sales, Scotty?
Well, I think going to the banks, I think part of what's going on is there's a lot of short selling in bank stocks. And I think it's creating a lot of people naturally, they look at share prices of what banks are doing. You have short sellers, the stock comes down, people start to panic. I hear friends calling me saying this is the next bank to, go under, when the fundamentals of the banks are solid. But if you create that fear through short selling and seeing the stock plunge, you're going to have people, pulling, even though it's federally insured up to 250,000, you have banks pulling the money out. As far as retail sales and stuff, obviously people are still out there spending money, but from what I hear and watch and see on the news, I think people have, fair amount of people have kind of burned through their cash reserves. And I think a lot of even those existing sales are coming through forms of credit, whether it be credit cards, loans or what have you.
Yeah, I think that's another looming problem. The credit cards are increasing as far as how much debt people are taking on. Their savings have dwindled significantly. Now they're taking on debt to support themselves. And it comes to a certain point where it's going to get down to bare necessities. And I think that's probably why we're seeing things pull back a little bit. And one thing, guys, I do appreciate with Scotty, he does have the news on all the time, but it filters through a rather rational head. So when I get information back from Scotty, there's a lot of the bullshit that comes through the regular news, and then it goes through Scotty Bear, and then it comes out a lot more rational. It makes a lot more sense. So you've got that. So when you talk to this guy, when your time to lock your loan or talk about interest rates, know that you have a very, very, very rational filter giving you information to help you make decisions on whether or not you lock or not. Now, if you're talking to me, I'm screaming lock, and let me show you why. Scotty, you guys are going to talk it over and figure why, because I'm not going to be on it as much and as often as Scotty's going to be on there. So that would be why I would definitely want to chat with him if I were you, to get a little bit more discerning information as to why. Let me see here. I'm trying to get my dang share screen thingy to work here, and it's not wanting to. Here we go. All right. Can you, well, it's still loaded. So are you able to see that, Scotty? Got the charts here?
Yes, sir. Yes, sir.
Right, here we go. So what I've drawn here is quite a few different things. Now you're going to, if you start following me, you'll see us on Twitter, Instagram, and other places that I'm punching these little shorts out. I did one yesterday because something followed the pattern of what I was talking about last week. I talked a lot about this particular line, 100.55, that price. The reason I brought that price up last week is because I was curious where things landed with the Fed, because if we have the Fed not doing quantitative easing anymore, they're not involved in putting all that capital in, where were we at prior to QE1, quantitative easing one, when the Fed decided to start doing that? We were at 100.55. That was where the 5.5 coupon was. And everything below that was pretty much before the Fed announced that. Everything above it from then on, up until very recently, when we crossed below it right over here, was all from Fed capital being invested. Now, in 2021, when the Fed said, hey, we're going to start tapering back, and 2022 was the massive taper. We saw interest rates jump. What was it, like 3-4 points? It doubled basically. Was because the Fed was not renewing, was not putting money back into the market. They take their profits and just restack them. They weren't putting people money back into these pools. So more was coming out than was going back in. That's why we're seeing this declining. The other thing I've been talking about, the 200-day moving average. We can't get decidedly above it. Anytime we've been above it, longest was 4 days, we've come right back below it. So look where we are again. We keep bouncing above it and coming back down. Now, I've drawn this pennant symbol because that's something traders will look at as a technical. Right now, they're saying the news that we're receiving is not something that they're going to look to decide whether or not they go in or out of bonds for their trades. So looking at the pennant. Now, those who brought the pennant symbol up saying, hey, the last time, they'll usually go the direction that they did the last time. So last time there was a pennant move, it moved to the upside, which is all this right here. So therefore, they believe it should kick to the upside. Guess what? Got squoze and pushed to the downside. My belief, this is just Aaron Chapman's belief, I could be 100% wrong because nobody else is saying it. There could be big error in the fact that I'm the one saying it. But this line here, one, I drew this one knowing we wouldn't get above it. We haven't. It's been decidedly a strong ceiling of resistance, and nobody else is talking about this ceiling. We keep hitting it and pulling back down. The other is what was established back in 2008. The reason it was established there, in my belief, is that was what is a value that would draw people in and get them back out prior to the Fed influencing the price with federal capital. So if they were not doing QE1, I believe we'd have stayed below that particular line because that was the demand for mortgage-backed securities at the time. Right now, look at this. It has been said over and over and over again for the last probably the last week or so by experts, float. And I've been screaming lock. Well, look where we're at. Everything we screened has followed along with exactly what we believe would happen. And we'd say lock up here, lock up here. They were saying float into things, and they were saying float in right here. And we literally turned around on our statement. So ultimately, I'm not saying that they're wrong. I'm just saying that the information they've provided so far has been off. We've been lucky enough that I'm looking at this at a different angle, and it seems to me that we're going to continue to go upwards as far as our rates are concerned. So I'm going to pull back a little bit and show these trends. Now we're trending downward. We hit this pivotal point. My belief, and I hope I'm wrong. Again, I keep saying this. I hope I'm wrong, because if we're wrong, then people have a little bit better opportunity. But I think we're going to push below this, and our new low is going to be somewhere in here. I believe our new low is going to be somewhere right in this particular range, is what I believe, where I put this yellow line here. We're going to be trading in this range. That's my belief. I hope that we're not going down into this being our low, because if this goes into our low here, that's going to suck, because that's going to be, man, pushing high eights, something like that. So I'm praying we trade in this particular range, locking at the top of it, floating into the bottom of it, that kind of thing. So that's my thought. Scotty, any thoughts on any of this kind of stuff? You think I'm off and completely not thinking correctly?
No, but I think first and foremost, for those that is purchasing in these current times, we have to forget about the window of COVID, 2 years, because I think a lot of people just, I don't know what to call it, false hopes, or I don't believe that we're ever going to see rates that we saw during the COVID era. So trying to use that in a market and conversation, or in my conversations, that, if I lock today, I'll lock today, just I'll refinance in 2 years from now when rates are lower. We don't know if rates are ever, well, I don't want to say ever, but we don't know when rates will be lower. And in theory, with where inflation, more so was and still currently is, we really should be, I believe, if you look at history, at higher rates than what we're seeing now. And as Aaron's brought up many times, I think we did it together. I don't know if it was a year ago or when it was, Freddie Mac, monitoring rates, it's probably 52, 53 years now. When you consider the average rate, I believe it was a 7.77 over the past 50 years. And that's based on primary residence. And so investor, that would put us, I believe, 8 point something or who knows what. What we're seeing for rates now are still really, really good. And, I tell everyone when I have my conversations that we're kind of, month after month lately, we kind of look at the same scenarios. We're anywhere, depending on the scenario, loan size, credit score, LTV at rates of 6.625 to 7.625, give or take. Again, every scenario is different. But that being said, if you look at the 50 plus year average of mortgage rates, we're still in a really good place. So I don't know, as Aaron says, and again, through my calls, I always tell everyone, if you're on the phone with Aaron, he's telling you to lock. What I'm telling you is, here historically, don't look at it like a rate's just a number. And again, from myself doing a transaction, and we advise people, for me, I'm a firm believer that when it's time to lock, you lock your loan. Like I'm not waiting for something magical to come through the door in the next few weeks before my closing. So when it's time to lock. If you're waiting for something, I don't know, a dream or something of a 5% rate or who knows what you're looking for.
Yep.
I don't know if it's a time to buy for some people.
I don't know, not for that particular dream rate. And I don't know if you can see the bankrate.com site I pulled up, Scotty.
Yeah.
I pulled this one up to show you guys. There's so many people keep calling us up saying, I want 6.5 and I want it with no points. Guys, I can't get that for an owner occupied. This is bankrate.com. These some bitches are the cheapest issue out there. What they do is they survey a bunch of different lenders. They take the average. They're saying 6.89% that's for a owner occupied. Look at this, the lowest we've had since March. I guess it's been since February this year. Lowest we've had is 6.73. Let's get realistic with where we're at, guys. It's going to cost points to get anything in the sixes, period. That's just the way it's going to work.
And a lot of things that people don't see is like there's always changes in the industry, and one of them, pertains to credit scores and certain things. Those that, again, we work with investors. They tend to be disciplined. They tend to have money on the sidelines. They tend to have really good credit. Unfortunately, the ones with the really good credit are the ones that seem to be being penalized of sorts these days. So while it doesn't show it on bankrate.com, but there are different things that make things priced differently, and it's not always advantageous for the investor.
100%. So ultimately, guys, our opinion is to lock right now. We know where I believe the trading ranges are. If it's different than that, I pray it's different than that. We'll guide you through it. You got Scotty to guide you there and give you information. Your decision. Ultimately, your decision. You can decide what lender you go to. I guarantee the other lenders, most of them are telling you to float right now. And if they've been telling you to float, they've been literally leading you the wrong damn direction because they don't know. The reason we know this, I've been at it since 97. Scotty's been at it since 1999. We've seen a lot of crap. And we're taking all that knowledge and pouring it on you to the best of our ability to help you make the right decision. So you make the right decision for yourself. And when stuff goes sideways, it's only you got to blame, unfortunately. And if you're following these guys that tell you 100% financing, do an ARM or float, and we'll see what comes later, they don't have your interest in mind. They just want you to get a damn loan done. So I appreciate you guys. We appreciate you listening. Appreciate you subscribing. Appreciate you being participating with us, trusting us with your business. And we'll catch you on Friday.